If you're invested in the Iraqi dinar or considering buying dinar, dong, or any other hard currency, there are a few things that you need to take into consideration concerning such an investment. First, in case you haven't already heard, the Iraqi dinar investment is considered a scam by dozens of organizations from the government to business to law enforcement. In case you have heard that, maybe you should know why they consider it a scam. People who speculate on currency valuations do so on Forex, an international electronic exchange market where large leveraged purchases are made and profits are taken, hopefully, on small fluctuations of 2% or less, usually much less. No knowledgeable currency speculator would ever pay a 15 to 20% markup on a currency because currency valuations don't fluctuate that much. Anybody who markets a hard cash investment is simply taking advantage of the inexperience of people who buy into their sales pitch. Nobody has ever gotten rich by buying a currency at its official value and exchanging it after it revalues. Anybody who tells you a story to the contrary is either seriously misinformed or lying. But what about the Kuwaiti dinar, some of you are asking? Didn't people get rich when it revalued? Well, no, they didn't, because it didn't revalue. You see, a revaluation occurs when the central bank of a country raises the value of their currency, and it's usually a very small amount of a few percent, and very often less than 1%. They do this usually for one of two reasons. They either raise the value as an economic strategy to address currency issues like inflation, or they do it as a response to international pressure, as was the case with China in recent years. This didn't happen with the Kuwaiti dinar. The official value was never raised. When Saddam Hussein's forces invaded Kuwait in 1990, he invalidated the Kuwaiti dinar and declared his Iraqi dinar as the official currency of Kuwait. As a result, international trading was suspended on the Kuwaiti dinar, and banks wouldn't exchange it. Kuwaiti citizens who fled their country took their dinar with them into surrounding countries and exchanged it for whatever people were willing to give them for it. Since the fate of their country and its currency were both in doubt, most people only offered about 10 to 20% of the official value of around $3.50, and there have been stories of people buying for as little as a nickel. When Saddam's forces were defeated and the Kuwaitis returned, they reopened the Central Bank of Kuwait and offered the Kuwaiti dinar again at the same official value as before. There was no revaluation. The people who made money off of the Kuwaiti dinar did so on the black market, and it's very unlikely that anybody made more than a few $1,000s. It's possible that a few banks or currency traders made $100,000, but even that is doubtful. To date, I haven't seen any evidence that anybody got rich by buying and selling the Kuwaiti dinar. Now, some people might be saying, okay, but what about the German Deutschmark? Don't tell me that nobody got rich when it revalued after World War II. Well, actually, the Deutschmark didn't even exist until after World War II. The German currency that depreciated during the war was the Reichsmark, not the Deutschmark. The Deutschmark replaced the Reichsmark when Germany redenominated their currency after the war. That's right, a LOP, not an RV. Look it up. You see, most of the things that people were told to sell them on the incredible potential in owning Iraqi dinar were just lies. And the people telling those lies are scammers. And that's why we call it a scam. But didn't Bush say that the war would pay for itself? Some are asking. Actually, no, he didn't. That's another lie. Bush was president for 8 years, and all of his speeches, press conferences, and interviews are on videotape, audio, or transcripts. And so far, not one person has been able to provide a quote of Bush saying that. His critics claimed that he said it, but they were wrong. A couple of people in the Bush administration said that Iraq could contribute toward the rebuilding of their country out of their oil revenues, but that's a far cry from forking over nearly $1 trillion to cover the war expense. The cost of rebuilding is closer to $50 billion, and they're paying $5 billion a year toward that without this big RV. Okay, but Bush signed Executive Order 13303, which gives us the right to buy dinar. He must have wanted us to buy it, right? Well, all you have to do is read EO 13303, and you'll see that it has nothing to do with the dinar or any other currency. It was issued to protect the DFI, the Development Fund for Iraq. That's just another lie. Sorry. Okay, but the U.S. Treasury is holding trillions of dinar that they're going to exchange for dollars so they can pay down the debt after the RV. Why would they have that much dinar if there wasn't going to be any RV? Another lie. The U.S. Treasury only has enough dinar to handle daily transactions and holds no dinar for investment purposes. That's in a DOJ document, folks. And they were so certain about that fact that they included it in one of the fraud charges brought against Brad Hubner and Charlie Emenecker from the BH Group because they were spreading that lie in their conference calls. But didn't Shabibi say that Iraq would have the most valuable currency in the region? Actually, he said that they would bring back the dinar through a redenomination. And he said that they currently have the strongest currency in the region. Now, they certainly don't have the most valuable currency in the region with a value of less than a tenth of a penny. So what did he mean by the strongest currency? He meant that they were backing their currency at 100% with their foreign currency reserves, which their neighbors aren't doing. Okay, well maybe we won't get rich, you say, but the dinar will still go up over time as their economy grows, so we'll still make money off the dinar. Actually, developing countries like Iraq are more likely to have a currency that goes down in value rather than growing in value. Take Vietnam, for example. Over the past 10 years or so, their GDP has tripled in value, but the Vietnamese dong has steadily dropped in value. This enables them to build their exports, as it's cheaper for other countries to do business with them. The last thing Vietnam wants is a currency that is going up in value. The same is probably true for Iraq. Well, if they're not going to RV, then why are they reducing their money supply? Actually, they're not. Not substantially, anyway. From 2003 to 2014, their money supply steadily increased. It only started to decrease when their dinar sales tapered off and the price of oil dropped, forcing them to dip into their currency reserves. Since they had less money to back their currency, they reduced the money supply in order to maintain a stable exchange rate. You see, contrary to what these idiot gurus are telling you, Iraq's policy for the dinar is a stable exchange rate. They allowed the value to increase about 25% from 2006 to 2009 as a monetary strategy to bring inflation down from over 50% to under 10%. But then they kept the exchange rate at 1,170 dinar to the dollar until January of 2012, when they moved it to 1,166 dinar to the dollar. The only reason they did that was that there was a brief spike in inflation because of all of the coalition forces exchanging their dinar for their native currency prior to leaving Iraq at the end of 2011. From January of 2012 until December of 2015, the rate didn't budge. That's stability, folks. And that's exactly what they stated as their policy for the foreseeable future. But didn't they say that they're going to remove 3 zeros from the dinar? When they do that, our dinar will increase 1,000 times in value, right? Wrong. When a country talks about removing zeros from their currency, they're talking about a redenomination, or a lop. Not only do you not make any money from a lop, you could lose everything you spent on the currency if you can't find a place to exchange it. There are a lot more lies than what I've mentioned so far, but I think by now you're getting the idea. If you're thinking, well, it can't be a scam because the dinar is a legitimate currency. That's like saying that it's not a scam if somebody sells you the Brooklyn Bridge because it's a real bridge. If somebody tells you they own the Brooklyn Bridge, they're lying to you. And if somebody tells you that the dinar is going to make you rich, they're lying. So maybe by now you're saying, I can't believe this. I've been scammed. I feel like such a dope. Welcome to the club. You see, I was once a dinar owner. From February to October of 2010, I accumulated over 8 million dinar. Then in the summer of 2011, I had an epiphany, just as you're having now. Shortly after that, I started a blog to warn people so that they wouldn't make the same mistake I made. It's no disgrace to be scammed. It happens to rich people like Sting and Kareem Abdul-Jabbar, and to smart people like Dr. Tim Berners-Lee, the creator of the World Wide Web. No, the shame is in ignoring the overwhelming evidence that you've been scammed and continuing in the scam. That's just stupid. Wise up. Get out now and put your money into something where it actually has a chance to grow, because it almost certainly won't with the dinar.